Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, November 19th, 2025. It's 3 o'clock on the button as I'm starting the video, so we have an hour to go in the trading day. And what I'm going to do is give you a quick update on the equity markets and a couple other things I'm watching. We'll try to touch on gold, silver. I want to get to Bitcoin. And again, just to reiterate, not to sound like a broken record, but in case you missed it or been sleeping under a rock, NVIDIA, the king of everything, reports tonight. King of AI bubble, biggest component of the Nasdaq 100, the S&P 500. And so it's going to move the market one way or another. All right, let's go over levels, things to watch. This is the 5-minute chart of QQQ for just short-term trades. We hit the minimum target zone shortly after the bell, and I just want to talk about the final hour of trading today. I put the odds at near zero now that we're going to hit that max target, so I'm going to take that out of there. Whether or not we go up to hit any of these additional 3 targets, including this current preferred target, certainly possible, but we're going to have to start soon. What we're going to need to do is take out, you can see we've been consolidating here, a little consolidation after the expected pullback off that first target. Came a little deeper than I thought it might. We had support there, but then a little bit lower on the futures. And we also, that was support, little trading zone there. You take that trading zone across the top. And so that's what's given, here, I'll put a level for you in the line if you want it. But after today, I'll be getting away from these 5-minute charts. So just to kind of put it in perspective, yeah, it can be done. We're going to have to giddy up soon. This is the open right here. On this 1-minute chart, you can see a dashed yellow line. So here's where we opened. And I'm going to grab that and show you it took about 45 minutes to go up about 1.6% or so after the open today. So when you go back to that 5-minute chart, if the buyers start to come in soon, then 1.6, let's see, 1.6 would be up here. Let me just measure it out. That next target would be 1.44. The one after that, 1.86, and then that final target now, 2.3. Market's heavy. Right now it feels very heavy. I'm going to go over the other stocks. So if it happens, again, it could happen soon. Could look like that. And I also have on the futures, let me show you that, a uptrend line I just added that probably, these are levels to watch. It could trigger some more selling. But again, I don't expect a big move this way or a big move that way before the close today. Too big, that is, relative to the recent swings we've had because NVIDIA is on deck. But these are levels traders will be watching. Reaction lows, 1, 2, 3. You have this little uptrend line. And then here's the price resistance right there that needs to pop on NQ. And could see some buying there. So let's kind of go over what caused me to recover and reverse at the lows yesterday. As I said, it was a combination of many things, most important being the final target on the futures, T6. I always say I'll watch both QQQ and NQ, and if one of the two hit the final target, then that's where you want to cover. So effectively, that was also, again, that was on the short-term trade. There's a downtrend line on NVIDIA, but what I wanted to get to on NVIDIA, I gave you. And again, NVIDIA is going to report, so take it with a grain of salt. But it's so far. Remember the blue levels I gave you last week, I think it was, and continue to reiterate. These are the key levels key support levels. And so far, NVIDIA is above at 179. Apple, I give it to you on the 60 and the daily as well, same level, 266.45. You can see that we remain above there. So that's the two biggest ones at holding support. Microsoft, I gave it to you at 492.77. However, remember, divergence isn't a buy signal, but as I mentioned, a lot of things are setting up with positive divergence on the 60-minute, some of them even on the daily. But what you do have, Microsoft is just a hair above its 200-day exponential moving average. Again, a level that buyers often step in. If they don't step in there, they usually buy the 200 simple, either of the two. And Alphabet, still holding above the 275 I gave you. Amazon took out the 238, but look at it on the daily. First pullback to test. Here, let me turn off all the lines. I had price support there. You could see I just turned off my support lines. But this is what they buy. They buy the 200s. And then when they're in a bear trend, they sell the 200s rallies back. This is where we took back the 200, successfully back tested it. The 200 exponential right there, 200 simple there. Both of them right there coming in together. And there it is. So like I said, a lot of key support on the most important stocks in the world. We could go over all 500 in the S&P 500 and we're wasting our breath because the bottom 490 don't move the needle like the top 10 due to the mathematical weighting. These are market cap weighted indexes, the Nasdaq 100 and S&P 500. So with NVIDIA being a $4.6 trillion company, it has the biggest impact of any of the stocks in the S&P or the Nasdaq 100. All right, simple stuff, right? So that's it. We're doing this mechanically. There's no way to know which way NVIDIA goes after earnings. My bet is whether we get an initial pop, which I can almost coin toss odds. You get a pop that might last for a few days or a week or so. Take NVIDIA up, take the market up with it, or completely crap out. Again, I by nature I'm a betting man. This is what I do for a living. But if you sit down, you're not going to catch me at the roulette wheel wasting money, on what, if it was just the red and blacks, you'd have 50-50 odds, right? Or even in odds, you'd have 50-50 odds. But no, they put in the zeros, the 0, double zero. And I was told, I'm not a big gambler in the casinos, that they even have triple zeros in there now, a lot of wheels, which then put the odds 100% in the favor of the house and against you. And so when that takes place like today, I'll just keep it light. My preference will be because the VIX has perked up, go home with mild short exposure, no matter what happens today by the end of the day, like I told you would. So just wrapping it up here, Broadcom also still above that level. So that's it, guys. The most important stocks, the top components of the Nasdaq 100, most of which are the top components of the S&P 500 are still above. Again, they put in divergent highs. They've been correcting. We milked that correction down with, near superhuman perfection, shorting at the highs and covering at the lows so far. So sit back if you caught any or all of that, especially if you gamed any of the bounces. You're up, in a week or so. Those trades cumulatively should be 15% plus on the Nasdaq 100, and we can I can sit back, see what NVIDIA does, see how the market reacts, and then re-engage, be it on the long or short side once the dust has settled after tomorrow. That's my trading plan. And then finally, I always say this. Number one, have a trading plan. Anytime you buy or sell something, you need to have a trading plan. What are you buying? Why are you buying it? Where are you going to buy it? Where are you going to take your profits if correct, and where are you going to stop out if wrong? Have a plan, stick to your plan. OCO orders are probably the best tool out there. You set a stop loss order, and then you set an order at your price target or targets, set them good to cancel. So the stop order will be canceled if your price target's hit, and vice versa if it goes the other way. And then that gives you the discipline. And then finally, I say I'm not a pure mechanical trader. I will sometimes do things on gut feel, instinct, and also very much change or modify my trading plan if I see something that I either missed before or the charts, meaning the technicals, have changed. And so for the reason that I went long or short a stock or whatever, if I can't make that case, or I can make a stronger case to be the other way, or for whatever reason I don't like it. I use that analogy from the movie Heat, a great movie, when De Niro sat down with Pacino at the first time they sat down together at the table, and Pacino, who was or De Niro, who was the criminal, said, if I feel the heat coming on me, there's not anything I'm not willing to walk away from in 60 seconds or less, or something to that effect. Same thing with a trade. If it doesn't smell right, feel right, pull the plug. But again, have a plan. If you're doing that all the time and you're second guessing, if you take a long trade and it starts to go up, and you book quick profits, even though you plan to go here, and you keep doing that, that's fine. You know, the old saying is nobody ever goes broke taking a profit. Well, yeah, you know what you do if you're cutting your winners short and you're letting your losers run, or you don't have a good success rate and you know you're running at less than 50% success rate. And you, even if you're using an attractive risk reward ratio when you go into the trade, you know, 3 to 1 or better, you know, risking $1 to make 3. But then if you're booking that quick, you know, dollar when you made it, and then the next short trade or next trade you get stopped out, loss, you're spinning your wheels, guys. All right, so enough on that. I kind of gave you the overview of the market, and let's see if we can get that final session rally. And you know, like I told you, I just kind of instinct and experience from both running this site and being involved in financial markets for a long time. I can see volume on SQQ, a lot of what I call JCL shorts. Those that didn't want to short here when we entered this last trade. This is when the QQQ and NQ broke down from the wedge. This was the run up, you know, 23% run in SQQ. They didn't even want to short here. This is when they started to get bearish. And so I know a lot piled in. Volume tells me that. I can look and see the recent surge in volume. And the market, it's kind of mean to the majority of people. It just, you know, wants to correct you. And its goal is almost to make, you know, the maximum amount of people lose. Again, if you're going on instinct, if you're chasing moves, if you're not getting in front, you have to anticipate. It's like chess. I'm not a big chess player, but I know that you have to have a strategy and be thinking multiple moves ahead, not reacting to the market going up and then you're bullish because, oh, everything's going up. Look how bullish today is. Up, you know, look at what Nvidia is doing. Or after, you know, 5 weeks of it going up, if that's when you feel like buying, again, you're probably buying right near or at the top right before the next correction comes. So, all right, we'll see, guys. This is just all short-term stuff. If it's not your cup of tea, like I said, stand back, especially with NVIDIA reporting. Let me give you the other things. You know what I'm really warming up to is Bitcoin. I gave you Bitcoin. This is IBIT, one of the main newer ETFs. Sell signal there, and that was really big support for me, and that was a sell signal that we got when that broke. We hit 1, 2, 3, all 3 targets right there, and this is good support right here, guys. Bitcoin is left for dead right now. You know, I don't believe in it fundamentally, but that doesn't matter. I trade this thing long or short. You give me a chart, I don't care if you're trading, you know, tulips. You know, if that tulip bubble from Holland came back today and you could trade tulip futures, if I can chart them and trade them and there's enough liquidity there, I'm going to trade it. So I just want to point out this sucker is oversold, unloved, and at support. And you even have, when you drop down to the shorter term charts, positive, aka bullish divergence. I also have Bitcoin futures, BRR, positive divergence on this 15-minute chart. You can pause the video. There's some near-term targets. I wish I had a better downtrend line in which to trigger sell signal, but the story is one of more so than a bullish falling wedge or any other type of reversal pattern. It's Bitcoin at support. This is the other chart I've given you. I track BTC, the actual crypto trades on the Paxos exchange. This is a 5-year chart with daily candles. Wash, rinse, repeat, guys. This is a divergent high. I don't believe that we didn't short shortly after any of these major tops or go long on the bottom. Again, Bitcoin, I have no allegiance to. Go long when it's time to go long. All I'm telling you is this is a major top. I'm just talking and picking up a few nickels again. But what I have here, let me clear this. I'll tell you what I see in the chart. This was a divergent low. That was a divergent high. These are the major trend changes over 5 years. That was a breakout right there. And then I had a secondary back trend line with a breakout back test. That gave us this bull trend. Recently, I only added one line to this chart since the last time I updated it for you in a video. And that's this one today. I did that. It's what I call a BOD, or benefit of the doubt support line. Let me tighten it up a little bit. I just wanted to show you big picture and now near term. So, and for the last few months, I was showing you this trend line here, telling you a sell signal would come on a break of that trend line. After that big divergent high, negative divergence, bearish rising wedge, we got it. We hit that, my first target, 98,158. We bounced, we back tested the wedge, rejected. And now we are at my second target, which is 89,000. And I also added this trend line today because when I look closely, I zeroed in. I'll show you where the reactions are. Comes here, catches that. This is I believe that's an errant candle. Either way, it's a candlestick there. These lows right there, and then coming in, catching those lows there. So dual support. And remember, when I gave you this wedge, I believe before it even broke down, I gave you this line right here, which is the measured target. 41% drop. The measured target of a bearish rising wedge is the widest part of the wedge, which I measured for you here in a video, added to where it breaks down. So that's again the projected measured target. I gave you two targets, or three, 1, 2, 3. So I still think we go down here and we may blast right on through there. I just again wanted to point out at support, and just like I look at multiple indexes as well as multiple securities, meaning not just QQQ, but NQ, the Nasdaq 100 futures, SPY, ES, the S&P 500 futures when I'm trading the large caps, and then I also look at multiple time frames, and that's what we just did here. So there it is, guys. You can take a shot at it. Don't fall in love with it because it could just go right on through here. Bitcoin's a trendy little sucker, moves big. But I wanted to point that out, that it's looking ripe for at least a counter trend bounce. And then, like anything else, bounce up here. Let's say if we get bounced back to 98, 158 or so, reshort, and then wait for or. When I say or, you take a starter position, let's say a starter short on the bounce back there with add to a full position once this level goes. Again, that's talking 3 steps ahead. We haven't even had the bounce or any type of reversal yet. But I did want to point it out for you and be very open to the fact that, everybody's scared about tech valuations all of a sudden. Like I said, I laugh about that because a few weeks when the market was all-time highs and these stocks were more expensive than they are today, and the vast majority of the market leading big tech stocks, everything but NVIDIA already reported, Apple, Amazon, Meta, blowout earnings, great earnings, and the market's rallying, and the AI bubble it's not a bubble. These guys real earnings. They have their biggest problem is they have more orders than they can even handle. Blah blah blah. That's what the song they were singing when the Nasdaq 100 was, what I just say. What was our drop? 16%. What did we just gain? I'm sorry. No, we reversed that. It was only been a 7.5% drop. But and then all of a sudden the media just starts grabbing whatever headline they can as to the cause of this drop. Not the fact that we had a beautiful textbook bearish rising wedge, a breakdown of support, negative divergences, but that it's concerns about. So either way, guys, let's say keep it very simple. From a psychological point of view, NVIDIA tonight will either reaffirm those concerns or at least temporarily dismiss those concerns. Or maybe it's kind of not a clear report. We'll see. Let the charts be your guide. And again, no reason to go home heavy, long, or short. That's just my opinion. All right, what else do I have for you? So talking about the metals real quick. More so the dollar. I told you the extremely contrarian call I had recently on shorting gold and silver was based on, in large part, my outlook on the dollar with that bullish falling wedge at the bottom of that long-term trading range there. And this is just a recap. You guys have heard this one. Broke out, hit my first target. We pulled back. We hit it again. I told you I expected to ultimately break through there, that if and when we did, it would be an incremental thing that you would the market would start to get the memo because a rising dollar is a net headwind for gold. Net headwind doesn't guarantee that if the dollar goes up, gold goes down. It just means simply that a rising dollar is bearish for dollar-sensitive assets like gold. And sure enough, again, I went over this already. This is when we started correcting. Then we had a reprieve. We broke out. Dollar got ahead of itself. It was a pretty healthy run. We had a correction right back to that T1 level. And then we reversed. So now what happened? Well, gold had a nice bounce when the dollar corrected. Everyone's like, yay, the dollar rally is fake. It's not, and that was the first drop. gold started to rally again, and gold's pulling back again because the dollar is rallying. So whether or not we're going to hit my fifth and final target on GLD, I think silver, I gave you a sold target on the daily, if I'm not mistaken. You have different targets on the 60-minute chart. And of course, GDX as well. Will likely, not guaranteed, but most likely depend on whether or not the dollar is going to hit my second target, UUP. So if so, then we'll have one last leg down, probably hit that. As I told you the other day, T2 now comes in with T3. When I first gave it to you back here, we shorted there, the breakdown in gold and silver breaking down. T3 was the trend line, which if and when we get there, again, making a big assumption, but if when we get there, they're going to come in together. So T2 and T3 are really one right now. And so once again, this is what it looks like, UUP, and about to pop the previous high. That's usually a trigger for the next leg up when you take out a previous reaction high. So so that's it. You could see if this happens, my expectation would be for another jog down gold, silver, GDX. Bitcoin's starting to look attractive here. Maybe a starter position. If it starts to firm up, you can add to it. I wouldn't go too crazy, especially with NVIDIA reporting tonight. And then what else do I have for you? QQQ. Let's just see what happens. This is it. Since I started the video, we took out that recent level of the resistance level I just showed you. And so let's see if we can have another redo of this. A lot of stocks above support. And the big question is right now, and this is what I try to do, it's impossible to see. Maybe if you're the Goldman Sachs of the world and you have, the data for what I would love to, the day they come out with real-time short interest, that's one of the things that's still antiquated. Again, I suspect the big firms, I know for a fact the big firms have more insight. The brokerage houses sell it. They have it themselves. I'm sure they sell it to the big trading desks. But for the layman like you and I, short interest is reported. Still, it's antiquated. It's as long as I've been in the business. They report it bi-monthly. So that's twice a month. And then the damn dissemination date is 10 business days after that. So you're getting information that's dated, stale dated by the time it's released quite a bit. But you can kind of project, and that's what I do by looking at the charts and figuring, okay, are more people likely to have shorted this XYZ stock or the index since the last report? And you can take a pretty educated guess whether it's gone up or down. So today, the million-dollar question is, are there a lot of nervous shorts that I want to cover before NVIDIA reports tonight in case it goes, NVIDIA rallies after, or are there more longs that now have just gotten clocked on this recent drop right here? There's our short entry here. And they're thinking, they are worried about, let's say, I think it's reasonable to assume that the media's headline du jour, which is the markets, investors are concerned about AI bubble and tech valuations and the AI stocks. Let's just say that's reasonable to assume that a lot of people are, right? And so are more of those people going to be nervous about being on the wrong side of a NVIDIA post-earnings move? Again, I go off the charts, guys. That's all I can tell you. I can sit here all day long and we can debate it and kick it around and we're all going to have our opinions, and there's no way to tell, only in hindsight who's right or wrong. So that's it. So that was the reversal point yesterday at the lows. You can see I told you when I would follow up with the more precise targets, but I also told you in the video these targets that I had on the way down just work the same in reverse on the way up. And you can see so far that's where we stopped. This was T4 right here. I haven't touched that line. That's T6, final target. We bounced back to T4, had a reaction. So if they power up, if they can, before the market closes today, if we get a real ramp into the close, that would be it. And that would be, again, like I just told you, based on that 5-minute chart, my guess is it will, if we do pop this morning high, take out that minimum target zone, which we hit right after the open, it's going to be anywhere in here. And we'll see. The clock's ticking down. I'm gonna stop it here so I can get the video out to you. It's 3:25 right now. If you're new to the site, what I do with these things is I upload them. They go to YouTube. YouTube will start to process it as soon as it's uploaded. And as soon as I can, I'll post it right away. If you click on that video and nothing plays back, that means I shot it because it's time sensitive. I shot it out to you before they've even done the initial rendering, which is in 360p, which is low definition, standard quality, a little blurry. If you refresh it, they keep processing the video even after the initial rendition's processed, and then it'll come out in 720. All you have to do is refresh your page. But again, if it's time sensitive, who cares if it's a little blurry? I'd rather get it out to you. So I just wanted to let you know that. That's why sometimes those videos might not be clear, especially on a fast moving market. All right, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.